2025 is right around the corner, and while it's time to close the chapter of 2024, we still have important surprise ahead of us for the new year. This is what we'll see in today's video, where we'll check out together what are the good and the less good changes that will be happening in terms of the tax brackets in Canada, as well as the important updates for the different financial programs in the country. So without further ado, let's first start by checking out what will be the impact of the new year on our tax brackets. When we think about taxes, we often get depressed, especially over here in Canada, where we are one of the most tax countries in the entire world. In Canada, it is also important to note that we have what is called a progressive tax system, meaning that higher personal income is taxed at a higher rate, and in that case, the lower personal income will be taxed at a lower rate. However, we also have the specificity that we need to pay both some federal taxes as well as some provincial taxes. It means that we'll basically pay a certain amount of our income to the federal government as well as another part of it to the provincial government. For the federal part, we can see that in 2024, the first bracket of imposition was fixed to about $55,687 or less, and in that case, you'll be paying about 15% of taxes. For the second bracket, including every dollar between $55,687 and $111,733, you would actually pay 20% of taxes. Then the third bracket will be up to $173,205, where you'd pay about 26%. And the two last brackets are respectively taxed at 29% rate and a 33% rate for anything above $246,752. For the provinces, however, I won't go one by one to see how much taxes you would pay per province. So in the case of this example, since I'm living in Quebec, I'll take the provinces of Quebec. For every Quebec resident, you can see that in 2024, you would have quite a lot less tax brackets, but that covers a wider range of different salaries. But if you'd earned over $247,000, you would be taxed a 58.75% on your total income. Pretty depressing, isn't it? But now let's see what the 2025 numbers are showing us. The good news is that in 2025, the percentage of taxes will remain the same, but what will be changing is the threshold that you'll need to reach before to be taxed more. And for that case, for the next year, we can see that it will be indexed to about 2.7% per classes. This means that the money that you'll need to earn to switch of brackets will now increase by about 2.7% per bracket in the federal brackets. But globally, the biggest changes occurs in terms of the basic personal amount that you have from the federal government, meaning what is the amount of money that you can earn before to pay some taxes. Back in 2019, the government announced an increase of the BPA annually until it reached $15,000 in 2023, after which it was said to be indexed to the inflation. This means that this amount in 2025 will jump to $16,129 that anyone could earn and not be taxed on the federal side. However, while these numbers might sound pretty alarming for many Canadians, keep in mind that we still have great financial programs to help us reduce our tax bracket. The first one is also the oldest one in Canada, which has been founded in 1957, and it is the Registered Retirement Savings Plan. The RRSP is a financial program that gives you the possibility to save and invest some money for your retirement, and all the money that you'll put in this account can be deductible on your current income. In 2024, the simple rule to determine what would be your maximal contribution that you could make in this account was pretty simple. It was fixed to 18% of your previous year's income up to a maximum of $31,560. In 2025, the CRA has increased this maximum up to $32,490, or an increase year over year of about 3%. So it is definitely an excellent way for you to optimize and maximize your retirement savings while reducing your total imposition bracket, especially if you're currently earning a nice salary. Another interesting program, especially for younger Canadians, would be the FHSA. The First Home Savings Account is a new program created in 2023 that has the objective to help young Canadians to save for their first down payment on their first house. And the interesting part about this account is that it has both the characteristics of an RRSP and of a TFSA. Indeed, just like the RRSP, every money that you'll be putting in this account can be deductible on your current income, and at the same time, all the money that you'll be able to grow in this account will remain tax-free, just like for the TFSA. So it is definitely an excellent way for younger Canadians that are looking to buy their first house in the near future. In 2024, the annual contribution, just like for 2023, was fixed to $8,000. And in 2025, this limit will stay and remains at $8,000 for the year. But we know that for the future, the maximum that you'll be able to invest in this account will be a global $40,000. Then the next account is the famous tax-free savings account, aka the TFSA. This account that gives you the possibility to invest your money and grow it completely tax-free as soon as you turn 18 is an excellent way for you to create generational wealth. In 2024, your annual contribution limit was of $7,000 and it will remain the same for 2025. It means that if you are 18 years old or more in 2009 and that you have not contributed to this account yet, your total cumulative limit in 2025 will now be of $102,000. It is definitely a no-brainer that every Canadian that has the money should be contributing to this account, especially if your goal is to reach financial freedom as soon as possible. If you're currently working in Canada, another important modification that you need to be aware of is in terms of Canada Pension Plan. The CPP is a retirement pension plan that both employees and employer need to contribute to. But if you are a self-employed, you'll also need to contribute to this program, but you'll need to pay for both the employees and for the employers. The objective behind it is pretty simple. It is that when you'll decide to retire, you'll be able to receive a certain portion of the income that you were receiving before your retirement. However, as for any other types of programs in Canada, the CPP has also massively evolved between 2024 and 2025 in terms of its total contribution limit. Before 2024, the rule was quite simple. There was only one ceiling and one maximum contribution limit that you could reach throughout the year. But now, since last year, we now have two different ceilings. So the first CPP contribution rate remains the same for both 2024 and 2025, fixed to about 5.95%. However, in 2024, the maximum annual pensionable earnings, meaning what is the salary that you'll be earning throughout the year, was fixed to $68,500. And in 2025, this number has now jumped by 4% up to $71,300. For the second ceiling, which is called the CPP2, the situation for 2024 and 2025 remains the same in terms of your contribution rate that is still fixed to 4%, going from an additional maximum annual pensionable earnings of $73,200 in 2024 up to $81,200 in 2025. And finally, last but not least, to end this video on a good note, we've recently seen that Prime Minister Justin Trudeau has announced a 2-month tax break on both the goods and service taxes and the harmonized sales tax to give Canadians a break on the cost of some essential goods. This tax break notably includes groceries, beverage, restaurant meals and drinks, as well as children's clothes and accessories. And so, even if the HST taxes only include 5 provinces, which doesn't include Quebec unfortunately, the good news for all Canadians is that you won't have to pay the GST taxes of 5% between the 14th of December 2024 to the 15th February of 2025. This will greatly help many Canadian families, especially with the holidays and the new year that are right around the corner. But talking about the new year, if you're looking for one of the best brokers to use if you want to start investing, or if you are an advanced investor looking for the best broker in Canada and in the US, I have recently decided to transfer a lot of my money towards Moomoo because of the great perks and advantage that it is providing its users. To discover more about it, make sure to check out the link in the description of this video. And if you're looking to find what is the best ETFs that you absolutely need to have in your portfolio before the coming of 2025, well, check out the video that's going to be right over here, and I will see you soon. Peace.